Hi everyone, Joe Carrig, managing broker of Coldwell Banker Real Estate in Danville. And if you've been watching me for the last few months, I've been telling you how this market is nuts. Matter of fact, in the 42 years I've been professionally selling real estate, I've never seen anything like it, with the prices escalating so quickly and the multiple offers already on top of the highest prices that we've seen. Now, a couple things to make clear. This isn't across the board. Matter of fact, that's what's so funny about this market. It's very targeted, and it's targeted at where people want to live. And because of COVID and because of the exodus from basically urban to suburban, people are looking for more bedrooms. They're looking for bigger yards. So when you look at the condo townhouse market in the San Ramon Valley, I can tell you it's hardly changed for years. Yet in the single family market that has 4 or 5 bedrooms and an expansive yard, we've seen prices go up 100 to 200,000 just in the last 3 months. But yet condos and townhouses with 2 bedrooms and not much of a yard basically have hardly moved the last 3 years. So it really is directed because of COVID that people want room to move a little bit. Plus, part of it is a lot of those people in condo townhouses are trying to get out of those. So we always talk about everything's about supply and demand. So if everyone's trying to move out of those condos and townhouses, it gives them more supply, and there's less demand because of, not many bedrooms and not an expansive yard, that market is basically just kind of stable. And where the single family market, where you have the more bedrooms and expansive yards, is like just, out of this world. Basically in the $1.2 million to $2 million range is where we're seeing most of the multiple offers. 5, 10, 15. I saw one the other day with 22 offers, and it literally went for 400,000 over asking. Now that's the exception, but 3 to 5 offers and 50 to 100,000 over asking is not the exception. Just like we've had properties that have been tough sales that are single families with 5 bedrooms, but they've had really small yards. So, what's driving the market? First, what we were hoping if you listen to me, I basically said, if you're a buyer, be ready, because the October before the November election has always slowed down because there's a lot of uncertainty, and because we're so far apart from Democrat and Republican that 100% of the people right now are apprehensive of what's going to happen. As I mentioned, it's not like Clinton running against the elder Bush, where one was a little bit left, one was a little bit right, but for the most part, nothing much would change. Well, with the election now, because everything being so far apart, the country is going to be fundamentally different depending on who wins. So we were hoping that we would see a little slowdown, and we did. Let me show you the first graph. Look at San Ramon. Now look at 2 weeks ago, and you can see that the pending properties went down from 125 to 115, and active went up from 72 to 90. And I'm thinking last week that, okay, here it is. Here's finally a chance for the market to even out a little bit. But was it a blip or was it a trend? Well, this week answered it, because look what happened this week. Pending sales went up from 115 back up to 125, and active sales went down 90 to 75. So as we talked about, anytime that you have pending sales outpacing active properties, it's a seller's market. Normally, because that's basically telling you that, with 25 places closing a week, there's a 3-week supply of homes. Now, a seller's market is considered anything less than 5 months. And yet we're talking about a 3-week supply. So that's kind of how nuts the market is. And we thought there would be a little relief for buyers, but you can see there was last week, but just boom, it just went right back up as far as the pending sales. And you'll see the same thing in Danville. You see that the pending properties went from 110 to 101 2 weeks ago, and now they went from 101 all the way up to 117. Now the one thing it did do is active properties went from 93 to 98. So the good part is the fact that at least the active properties are in Danville are keeping up with the pending sales, but you can still see there's a lot more pendings than there are active properties. Very strong, 13 properties closing, 98 properties on the market. You basically have a month and a half supply of homes on the market. So when you go to Blackhawk, you'll see a little bit different. You see the pending sales actually went down, active properties went up. Now our active properties went down and pending sales went down. So that market kind of stayed the same. Pending sales drifted down a little bit and active properties, went down. So, but one thing to remember about Blackhawk, a few weeks ago, we literally had more pendings than we did active properties in Blackhawk. And we've never seen that before. Because remember, the average price of the active properties in Blackhawk is $3.3 million. So there's a lot of homes on there that are going to take a long time to sell. So the Blackhawk market is very strong also. You look at Alamo, and Alamo bucked the trends a little bit also, where the pending sales again went up. You see 2 weeks ago it went down from 28 to 23, while the pending sales went back up to 26. And what did the active properties do? Where 2 weeks ago they went up from 49 to 53, they went back down to 44. So the same old thing like San Ramon and Danville, where we thought we had a little relief. Across the board, active properties went up and pendings went down. But what happened the last week? Well, pendings went back up and active properties went down. So really we're back where we were a couple weeks ago, an extreme seller's market. So again, we'll see what happens in the next couple weeks as we only have a couple more weeks before the election. Dublin, you can see Dublin's been pretty consistent. One of the reasons that you see Dublin so out of whack with pendings compared to actives, unlike Blackhawk, where the average price, of an active property is over $3 million and the average pending is around $2 million, the average pending in Dublin is actually less than $1 million. So you can see there's a ton of pendings, and you can see the active properties just dipped a little bit. That's a pretty consistent market, but it's very much a consistent seller's market. So why is all this happening? Well, first off, let's look at the stats. Well, you can see, I think this is one of the first weeks where you've seen every single area, San Ramon, Danville, Blackhawk, Alamo, and Dublin, be over 100% of asking. So things across the board are selling for more than asking. Now, when you look at Alamo and you see, it went from 94 to 107. Remember, when there's only 3 or 4 closings, one closing can really, make the numbers jump. And we did have one of those. We had a property in Alamo that was listed at $2.4 million that sold for $500,000 over asking. It was nuts. It was a nice ranch style home. It wasn't a mansion, but still, what is basically strong in this market is, as I mentioned, the expansive yards, the bedrooms, and then the other thing that has always been strong is West Side Danville, West Side Alamo. And that's where this ranch home went for $500,000 more than asking. And obviously that made the number jump up to 107. But you can see how strong it is. Every week when I talk, people, I mention and people ask me, what's going on with the market? And I tell them, when people ask me, I go, the sensible part after professionally selling real estate for 42 years and selling through 5 recessions, and we're now going into our 11th year of increased prices, which is the longest bull run that we've had in the real estate in at least my 42 years, the sensible part of me says, okay, there's got to be a correction. But then I look at it and, my analytical part looks at it and goes, okay, what's going to bring around that correction? Well, we thought maybe the election might help a little bit, and it looked like it maybe had some effect for a week, or unless that was just a weird blip. But again, it was across the board. But then across the board, last week, it jumped back up. Well, so I look at it and say, okay, well, what's going to make it go down? We always talk about it every week. You could drop me any place in the United States, and it's all about, show me the actives and the pendings, and I'll tell you where the market's going. Well, you've seen in our situation where the pending sales far outpace the active properties. And that's why properties continue to rise. So, what's going to change? Well, there's a couple. It's supply and demand. So let's look at the supply. Look at the inventory level of existing homes. May, June, July, and August. Look at that. And because I always tell people that, we're not going to get more inventory around here. There's no land to build. It's not like a builder. There's a little infill products here and there. But, Windermere and Doherty Valley, which are close to 15,000 homes, that's for the most part built out. And there's, besides a little infill product here and there, there's just not that much land to build. And it's very costly to build and develop. And that's why the builders are basically, don't like to build in California. So it's not like the inventory is going to jump up. Now, sometimes people will go, well, look at Joe, the inventory jumped up. Well, 2 weeks ago is a perfect example of why that jumps up. It's not that inventory jumped up. You saw pending sales go down, which means obviously the same amount of homes are going on the market, but it looks like inventory, built up. That's what happens. We're not going to get a lot of new listings, but if the buyer demand backs off, that will even out the supply and demand. So when we look at the supply, okay, well, it's not going anyplace. So what's going to change the demand? Well, the interest rates. I heard something the other day which was hard to believe, and this is from the Federal Reserve, that didn't think interest rates were going to change or going to stay around 3% up until 2023. How can they say 3 years in advance? But that's what they're basically saying. Now, when you look at this chart, the forecast for conventional 30-year fixed mortgages, you got Fannie Mae, Wells Fargo, Windermere, National Association of Realtors, Freddie Mac, and Mortgage Bankers Association, basically, expecting interest rates for 2021, if you average those out, it's basically 3%. No one is expecting interest rates to go up for the next couple years. So there's a couple things driving the demand right now. It's one is people saying, hey, I don't have to drive to work anymore. So why the heck would I live in a little 1-bedroom rental where I can almost buy $1 million home for what I'm paying in rent, in suburbia, and have 4 to 5 bedrooms for my kids and for my offices and for my Zoom rooms and an expansive yard, since our kids can't even go anyplace. I mean, they're not even letting them, trick or treat this year, which is a little unbelievable anyway, because let's face it, we wear masks most of the time for trick or treating. But so people are looking, for those yards. So, and then you put in that historically low interest rates, almost like free money. We just sold a home for $3 million, and we started out looking for these people for like $2 million. And so, but they couldn't find what they wanted, and they ended up jumping up to $3 million. And we were talking, they'd go, Joe, money is basically free. And it is when you get down to, I think they paid 2.8%. So the interest rates are driving the market. So that's part of the demand. The COVID, obviously people wanting space and not having to drive to work, is basically driving the demand. None of those things look like in the near future they're changing. COVID, certainly, the lockdowns in California are the strictest in the United States. And we don't see any changes of that happening, of them loosening it up a little bit. The other thing is low interest rates. We don't see that changing. And the fact that people are working from home, we don't see that changing. So all the factors with the demand are still there. So what's going to change? Even though my sensible part says, Jesus, it's been 11 years, it's time for a correction, where's the numbers that's going to come from? Now, maybe the election, maybe depending how the election comes out, there's a consumer confidence issue. No matter what side's elected, obviously we know who's ever elected, 50% of the people are going to think that the country's going in the garbage can. Because it's so, spread apart. But so there could be a little consumer confidence. I'll tell you right now, it's not the unemployment. I mean, the unemployment obviously was close to, 15%, but only for a couple months. It's down to 7.9. And when you look at it, I've shown that graph before, they expect it to keep going down. But those people that are unemployed our service workers, a big part of them, I think over 60% are service workers. And I'll be completely honest with you. In the Bay Area, unfortunately, the people that are working in restaurants, the people who are working in movie theaters, in the service industry, they're not buying our average home for $1.5 million. And it's unfortunate, but that's just the way it is. So the unemployment isn't affecting the market, is going to affect the demand at all. So really, when you look at it, maybe something happens in the election. Certainly, there's different parties feel different about mortgage deduction. A couple years ago, it was moved from $1 million to 750. Basically, with the SALT Act, for the most part, we can't deduct, our property taxes anymore. And there were a couple things on the table at that point that was not passed through. So some of those, the demand could change. The other thing is obviously California is so on, because people buying these $1.5 million, $2 million homes, they're considered the 1% when you look at the averages. And right now, California is looking at passing a lot of laws that are not going to be friendly to the 1% tax-wise. And you see a ton of people moving out of California, because of the taxes going up. But at the same point, when you look at those people compared to, all the people from in our area, yes, there is an exodus from millions of people more are moving out of California than moving into California. But in our Contra Costa, in our San Ramon Valley, we have a lot more people moving in than moving out. Because as you know, I've been professionally selling real estate for 42 years. It doesn't get much better than the San Ramon Valley. So obviously, every neighborhood is a little bit different. If you have any questions at all, again, my name is Joe Carrig, managing broker of Coldwell Banker Real Estate in Danville. Phone number 925-487-6838 or joe.carrig@cbrealty.com. Again, reach out with any questions. Again, cell number 925-487-6838. The one thing we can be thankful for is, we've got some blue skies. And those brave people working on the front lines, and they're still out there tamping down these fires. May God bless them. God bless our first responders, our police, our military, and may God bless you, and may God bless your family. So we'll talk to you in a couple weeks. Please feel free to reach out, and can't wait to connect again.